Welcome to my channel today, Detailed Forex. Today I'm going to discuss a very interesting pattern, the Forex strategy that works perfectly for small accounts. Now, the interesting thing there is that this, my Forex strategy, works for small accounts, big accounts, medium accounts, any account you want to trade with. It works. Then it is not bulletproof. The only thing there is that I have high rate of winning in the trade, 80, 85% range. That is what I have. Yes, it is focused on tight risk management and smaller profit targets and suitable for beginners with limited capital. But if you learn or master with it, you will definitely become a successful Forex trader. I have made so much money with what I'm about to reveal to you here. Now, these are the 7 things that makes up the strategy, the Forex trading strategy. The language, the support and resistance, the trend, the pair, the direction, the percentage, 1%, okay, profit, 1% profit of my capital, then no stop loss. Now, because I don't use stop loss, that is what gives rise to tight risk management. So how do I trade? First, I understand the language. If you don't understand the language that the Forex speaks, no need. Where is the language coming out? It's from the charts. The charts, plain chart. My chart is usually plain. They speak language. Those formation of candlesticks are behavioral patterns of Forex trader. It's a behavioral patterns of Forex trader like you. So once you understand what the chart, what the candlestick, a candlestick is saying, then you must become a successful Forex trader. No matter the robot, no matter the expert advisor, EA, no matter whatever you want to trade with, if it doesn't understand the language, the charts, then you cannot trade successfully. So you must master the chart pattern, the language. So there are a lot of languages Forex speak. In one of my videos, which I think I may add the link at the end of this video, I think I may, you will see the languages. It speaks so many languages. So what do? You have to master 2, 3, 4, 5 and focus on it. My area of specialization is the engulfing pattern. I prefer bullish and bearish engulfing pattern. That is the language I understand. Once I look at the chart, this is what it gives me. And obviously, once I see it, I'm good to go. So the basics of this strategy is all about understanding the language. We have a lot of languages: bullish engulfing pattern, double top, the gap, so many of them, but I am a specialist when it comes to bullish and bearish engulfing pattern. So then I consider the support and resistance. Are they minor? Are they strong? Are they heavy? Support and resistance, it determines my trading strategy. Then the trend, where is the market? Let me tell you, the trend is the force. If you can't understand where the force is coming from or where it's going, you can't understand what you're saying. You can't trade successfully. So the trend is part of the language you must learn. Then my strategy, a pair at a time. A pair at a time. I don't get confused. In fact, I've mastered my pair that even with the close of eye, I can tell you what the market will do. A pair at a time. Then I trade one direction at a time. I don't trade buy and sell. No. If I'm buying, I will buy. If I'm selling, I will sell. I don't do buy and sell at the same time to avoid confusion. Now, profit taking. Once I have 1% of my capital in the market, I'm good to go. 1% of it, I'm good to go. Sometimes it exceeds 1%, but I'm telling you that once it gets to 1%, I am ready to leave the market. Then I don't trade stop loss. I don't do what? Trade stop loss. In my own terms, that is not stop loss. It's called stop further loss. So I don't trade stop loss because my risk management is tight. So it pulls off the pressure from me while trading the market. So let's go to the chart and see what I'm talking about, how I trade. This is exactly how I trade. This is Euro USD. That is the pair I understand very well. That is the pair that I can, even while sleeping, I will tell you what is happening in the market. I know the number of pips it can go before start talking of reversing. These things are very simple. Please, if you're enjoying, subscribe, share, comment, be part of my community, please. Let us grow in this trading world. It's a very interesting journey, and you must grow with someone who has been there for over decades trading Forex. I've been here for more than, I started trading since 2007 to date. So you know what it means. So kindly subscribe, let us grow. Now, this is the chart. First, I want to know the trend. Normally, I determine the trend from a larger time frame, monthly or weekly. From the weekly, the market is ranging. So I don't have clear trend here. It is ranging here, as you can see. Now I will check here. Now, what I do is I will take note of the first or the closest trend. This is the closest trend. That's the first trend, the first thing I will do. Okay. That's the first thing. So the closest trend is downward first, the past trend. Now, this is a trend, but how far? What is about or what is happening now? The closest trend is downward, but the market is moving upwards. Now, going, how far has it gone against the old trend? As let's see if it has gone up to 50%. Now, that is, I'm looking at estimating half of this trend. So this market has tested 50% of the original trend. Now, something is about to happen in my own trading pattern. The strategy is, okay, once it has gone 50% of this, there's possibility of the market coming to retrace to test here, or it can continue upwards to this point. You know, it is not a game of certainty, but it is a game of probability. It's a game of probability. So from here now, this market is an upward market. The trend, the next trend is that, the next, not trend anyway. So you don't call this trend even. You call it market movement, because the trend, some trend takes years, 2, 3, 4, 5 years before trend change. The economic the fundamental analysis of peers don't change easily. Let me give instance. A president, most countries have 5 years, 4 years, 8 years term. Their economic policies last as long as that 4 years, 5 years. Most trends last for 5, even 8 years. So trends don't change easily, but what you consider is the movement, the market movement over a particular time. So we call it a temporary trend. Are you getting it? So now, what is the market movement here? The market movement is upward here from the higher time frame, monthly time frame. I have known that the market is up. I will tell you many reasons why it is not, why it is up. Look at this pair. Look at this point. Look at where I'm circling. Here, a bullish a bearish engulfing pattern occur. Here, a bearish engulfing pattern occur, but it did not continue downward, which is the original trend here. Why? After it occurred, you must wait for confirmation. The confirmation is that if another candle had closed below this, somewhere here now, you know this trend will continue. But it did not continue. The buyers take over the momentum. Similar thing happens here. So I know that the sellers, which is the trend, downward movement, they are weak now. So this market is up. So what do? I go back to daily charts. And in daily chart, I don't trade more than 2 days. I don't trade, my trade doesn't take more than 2-3 days to mature. So what do? A bullish engulfing pattern has occurred here. This is a bullish engulfing pattern has occurred here. And the market keep going. Keep going. There is a retracement here, which is supposed to be bearish engulfing pattern, but it did not get to the half of this long buy candlestick. Had it been this candlestick closed here, it has been fully bearish engulfing pattern. However, you wait for confirmation. On confirmation is another candle closing below here. So since it did not close even half of this, obviously the buyers are in the market. Now, I will buy this trade. I will take this trade and exit somewhere here. 1-2 days, I'm good to go in the market. 1% will happen. Now, look at something else. If you understand the bullish and engulfing pattern, now a bearish engulfing pattern occurred here, just little into this longest candlestick. Now, what else do you expect? We expect the market to calm down. If a candlestick had closed somewhere here now, I would have sold. But now, the buyers push the market back, wiping out all this. This is called railway track or bullish engulfing pattern. However, remember the market is going up. So with this formation is a very strong indication that you should buy. I would have bought this market, even this way I would have entered this market after the day close. So the market would have retraced and move. You see where it's going. So this pattern works perfectly for me in Euro USD. So you must understand the language of Forex. I trade bullish engulfing pattern or bearish engulfing pattern. Now, the advantage is that I don't stay in the market more than 1 or 2 days. I analyze the immediate, I go to the higher time frame, understand where the market is going. Now, let me give you an instance here. Here again, a bullish engulfing pattern has occurred here. And it occurred with a good confirmation because it's after you see where it closed. This is where the candlestick closed. It closed deep into this candlestick, deep into it. So I would have sold. If I have bought here, now this market will trace to this point and I will go. Even after the day one, it will be profit. I will go out of the market and wait for a little retracement, which is this, to buy again. So this is exactly how you trade, how this strategy works for me. Let me tell you something. Nobody will tell you this. My strategy works for me. Someone else's strategy works for the person. Your strategy must be developed by you. What you do is take a look from other strategies. Learn. What do you pick from me? You pick from me that, okay, I trade plain charts. I learned or I understood the pattern, the engulfing and the engulfing patterns, bearish and bullish engulfing patterns. When they form, I wait for the confirmation now before I strike. That is my trading pattern. I trade based on the capital I have. I trade based on my personality. I am a very conservative trader. This is not my primary source of income. So because of that, I can wait for some days for the market to mature. So all these things are factors to, to put in developing a forex trading strategy. So if you've watched my strategy and you have other strategies, sit down, analyze yourself, validate yourself as a trader. Are you aggressive? What kind of person are you? Do you have the capital? Do you have the time? What is your risk tolerance? Your emotions? That is what you do to build it into your own strategy. Please, if you're enjoying, subscribe, share. I want you to be part of my community. I have a lot to share. More than 15 years in this industry. I will reveal the lies that kept many or has been keeping many in this industry without progress. So please subscribe. I will get a video where I discuss the languages, the forex trading languages that you ought to know. And please watch them and pick 1 or 2 or 3 language you will understand and stick to it. Get pairs. Some pairs obey particular language, or like Euro USD, when it comes to engulfing patterns, I have perfect setup on it most times, and it doesn't fail me. So I have high success rate trading Euro USD. I urge you to develop your own strategy today using what I have shown you. The secret is know the language, then understand the language. The power of language is so much. Once you understand the language, the market will be a free ride. Thank you for watching. Please subscribe, be part of my channel as we grow once more. Thank you for watching.